want every beginner to understand this in just one watch. Just one watch. Price is not random. The market is never random, but it moves to take liquidity. So right now, if you can understand and spot liquidity, even as a beginner, I bet you can make a serious amount of money in the market, right? I bet you with that. So in this video, I'm going to explain and break down what is liquidity and how to spot liquidity in the market in a very simple way. In a very simple way. So please make sure you watch this video from the very beginning to the end, and I bet you are going to be better after this video. I promise you that. So let's go straight to it.
Alright guys, so before I post a video on my strategy that I use, which is the Asian sweep model plus the SMC concept, right? Before I post any further video on that strategy which I use, you have to understand liquidity, right? Because liquidity is also part of my strategy. I use liquidity in my everyday trading, right? I look out for liquidity zones and all this, and so liquidity is part of my strategy. So before I do any video on my strategy, I have to help you understand liquidity, what liquidity is, and the rest. So without doing much talking, let's go straight into the video. All right, so what is liquidity? So liquidity here is where orders are sitting in the market, right? Liquidity is where orders are sitting in the market. And one thing is, you must understand that for every buyer there must be a seller, right? For every buyer there must be a seller in the market who is willing to fulfill your orders, right? A seller who is willing to fulfill your buy orders, right? If not that, the market is not going to go on, right? So this means that the market needs liquidity to move, right? Every day the market needs liquidity to move, every single day. If there's not much liquidity in the market, you see price consolidating, right? You see price just consolidating around without knowing where to go, right? Without knowing where to move next, because there's not much liquidity in the market, right? So, and please put this in your mind: every time you lose a trade, right? Every single time you lose a trade, you add forward to the market, you becomes the liquidity, right? So you becomes liquidity. So simply put, liquidity is called to pending orders and stop losses, right? Pending orders and stop losses. Liquidity, you just simply put, liquidity is called to pending orders and stop losses. So now the question becomes, how do you exactly spot liquidity? And this is where the concept of liquidity zones comes in, right? This is where the concept of liquidity zones comes in. So like I said, our job as traders is to follow the smart money, right? Because they have the power to manipulate and move the market. The institutional traders, right? The smart money traders, they have the power to manipulate and move the market. Of course, they have the power to manipulate and move the market. So for us, the retail traders, to trade with them, we have to understand liquidity. So as I said earlier, without liquidity in the market, you just see price consolidating, right? Consolidating around a certain level, right? So for us, the retail traders, to trade with them, we have to understand liquidity and identify them properly, right? So without wasting much time, show you how to identify and spot liquidity, right? So these are liquidity zones. Sorry, these are liquidity zones. You have the equal highs and lows, you have the swing highs and lows, the trend lines, and the support and resistance, right? And like I said, liquidity is where orders are sitting in the market. So these are liquidity zones, right? So first, let's go straight on. Let's start with the equal highs and lows here. So with the equal highs and lows here, right? This is how it is, right? So when price forms equal highs and lows, it means many traders sees this as a resistance, right? Those retail traders, we the retail traders, we see this as a resistance. So what we do is, and this also known as a double top, right? This is a double top, also as a double top, the equal highs, right? So right now when we see this, right,
When we see this, we the retail traders, we will placing our sell orders. We will sell here, right? We will sell at this level. Wait, let me change the color here. Okay. We we are going to sell at this level. We will sell at this level, right? And we will be putting our and we will be putting our stop losses below the highs here, below this equal highs here, right? So, and also those are that are planning, sorry, those that are planning to go in for a buys, right? They will be placing their buy orders, thinking when price breaks this level, the market is going to continue, right? So what smart money will do is those that they are those that sold here and place their stop losses above this equal highs, right? Smart money is going to manipulate this level. Sorry, smart money is going to manipulate the market and take out those that place their stop losses here and also trigger those buy orders here. And when the liquidity above this level has been is completed, right? When smart money grabs the liquidity above this level, this is where the big moves happen, right? Price fall, right? The market drops. The market drops and continues the bearish trend. So those that place their buy orders here, those buy orders has been triggered and also they has been stopped out, right? And those that place their sell, those that sold here and putting their stop loss above this level too, they have been stopped out too. So the market goes into the right direction, right? So that's what the smart money does, right? That's what the smart money does. So you sell here, you're going to sell here, right? You're going to sell here, you place your stop loss above this level, right? And smart money will just come into the market and manipulate price. Smart money is just going to manipulate price and take you out because there is available liquidity above this level, right? Because there is available liquidity above this level, they will take you out and also take out those that place their buy orders here and also take them out before the actual moves happens, right? So this is how the smart money plays in the market, right? They will get you stop out before the real big move happens, right? So that's it. That's how the smart money works. So as many retail traders seeing this as support and resistance, this is not support and resistance, right? This is double top or the equal high. So what they do is, as I said already, they place their sell, the sell orders is being triggered, or they sell here, place a stop loss above the highs here. They get stopped out, and those that are placing their buy orders here too, they also get stopped out, right? So with all this stop losses and pending orders above these equal highs, right? Above these equal highs creates a pool of liquidity in the market. Those stop losses and pending orders create a pool of liquidity in the market. So I said earlier, liquidity is pending orders and stop losses, right? Pending orders and stop losses. So the key point here is equal highs is equal to resting liquidity above, right? Equal highs is equal to resting liquidity above. So anytime when you see equal highs in the market, please have patience, right? Just wait, let smart money take out liquidity, let liquidity been sweep, right? Let smart money sweep out liquidity before you can enter for a trade, right? So after the sweep of the liquidity, you could have entered the trade around this level here and just take profit. This will even help you minimize your lose, right? You can just set stop loss above and see the remove will just happen and see you will be in profit at once, right? So next time you see double tops, or you see equal highs or equal lows, or double top or double bottom, right? Just wait for liquidity to sweep, right? Just wait, have patience, the market. So this is what the smart money does. And please remember, you don't have the power to manipulate the market, right?
We are nobody in the market. We are just retail traders trying to get some bag home. And if you don't trade with a smart money, you will lose money every single day, right? You're going to lose money every single day. So this also goes to the double button. Same thing apply here. Same thing, resting liquidity below the level. Smart money sweeps it and also sweep by others, by others, those by others, and those that are placing their stop losses here. Smart money will just sweep it and the big move will happen, right? This is how the smart money plays. This is how they play, right? This is how they play in the market. So please have patience. Have patience. So you move on to our swing highs and swing lows. You see here, price is making creating a high highs, high lows, high highs, high lows, and the rest, right? So right now, what the market will do is, as I said, the market needs liquidity to move, right? So you see this as a market structure shift, right? The market have to reverse and sweep the available liquidity around this level, right? Sweep the available liquidity around this level before that drop down happens or before the big moves happen, right? Before the big move happens. So swing highs and swing lows, these are natural targets for the market. Why? Ask me why. Because traders place their stop losses above swing highs and below swing highs. This makes liquidity zones, right? So you placing your stop loss above the swing highs, right? And swing lows here, right? Swing high, there's swing low below, right? You placing your stop loss above the swing high, right? And you see smart money have to manipulate market, go up to grab liquidity at this level here before the big moves happen, right? So please put in mind, price moves from one liquidity pool to another. So there was liquidity here, the market came to sweep liquidity at this level before the big push up, right? Now there is a market structure shift here. The market have to go up and grab liquidity before it moves down further or before the big moves happen, right? So if not liquidity in the market, I don't know if the market will move or not. So as I said earlier, liquidity is a fuel to the market, right? It gives fuel to the market. Yeah, liquidity is like a fuel to the market. So you go moving on to our trend line liquidity here. This is our trend line, right? So let's go. This is our trend line, right? And you see trend line, when traders draw trend lines, many of them enter trades along the lines, right? So many of traders enter trades along the line. So you see there is available liquidity here, liquidity here. Because why? Because there are lots of traders entering trades along the trend lines and placing their stop loss below the trend line. So when you see a move like this, you be thinking, okay, when price breaks this trend line, right, it's going to be a reversal, right? It's going to be a reversal without thinking, okay, this is just smart money manipulating the market. The price will just go down a little bit, and you see, then it reverses to the previous bias, or it reverses to bullish as it was already, right? So smart money will just manipulate market to get liquidity before it pushes up. It happens sometimes. Sometimes it's a valid breakout. Sometimes it's not a valid breakout. So that's it, right? Sometimes it's a valid breakout. Sometimes it's not a valid breakout. So watch out. Smart money can manipulate market to take a liquidity from the trend line before it pushes up further, or it will just break the trend line and turns bearish, of course, right? So and this and right, so those retail traders, they also places a stop loss below the trend line, right? Below the bullish trend line, or above the bearish trend line, right? That's why price often breaks trend line. So as I said earlier, the market price will just break the trend line and push up further because there is liquidity. Because there is liquidity sitting below the trend line. So smart money will just manipulate price to break and take liquidity before continuing the real move, right? So they will just fake you out, break trend line, and boom, you see, you get stopped out thinking, okay, price has broken the trend line is broken. Okay, let's go and look for a sell. Let's look for a sell without you knowing that this is not a valid trend line breakout. Price is just coming for a liquidity, right? The price is just coming for a liquidity. So before you realize, boom, you have been stopped out already. You can't do nothing about it. You don't have any power in the market, right? You just lose your hard earned money. So sometimes a trend line breakout can be valid or invalid. It's up to you. You just need to have patience, right? So this is the trend line. Same thing applies to this one, which is the bearish trend line, right? Same thing applies to here. So last, you move on to our support and resistance. Last, you move on to our support and resistance, right? So support and resistance are areas where traders react, but they also places their entries, stop losses, right? They also places their entries and stop losses. So this creates liquidity around these zones, right? The stop losses and the entries and the orders. This creates liquidity around these zones here, resistance and support, right? So that's why price doesn't just respect them, right? Price doesn't just respect the support and resistance zone, but they often sweeps them first. Liquidity is often sweeps first, right? Liquidity is often sweeps first. So price will just go up, sweep above liquidity, and push down, sweep above below liquidity, sweep. That's it. That's how the market moves. The reason why the market consolidate is if there is more liquidity below this level, right, and also more liquidity above this level, price will just be consolidating in this range, right? Because when price goes up and sweep above liquidity, there will be below there will be liquidity below this level, so the market has to come and sweep it again. And when it comes down and sweep this liquidity below, there will be another, or there will be available liquidity above this same zone again. The market just have to go and sweep it. So as I said earlier, the market needs liquidity to move. The market moves from one liquidity pull to another, right? So the markets will just be grabbing liquidity up and down, up and down, up and down, like that, just like that, right? Just like that. So this it, right? This is, hope you understand what I told you, right? What I just showed you. This is just a scenario, right? This is a scenario that, and this what I understand. I want to show you. So before I post any further video on my strategy, which is the Asian sweep model plus SMC concept, right? You have to understand liquidity, right? The concept of liquidity and how to spot liquidity zones and all these stuffs, right? You have to understand them. So I'll be doing much video. I'll be posting more videos on my channel. Please make sure you subscribe, like, comment, and please, I'm just a beginner here. I'm a beginner. I'm learning first. I'm a beginner like you, right? I'm a beginner, right? No cap here. I'm a beginner. I'm learning forex. This is my understanding, right? This is how I understand this liquidity zone. This is my understanding about this liquidity. So if you have anything on your mind, you can
Okay,
comment in the
thanks for
comment
watching, and please
section.
make
Like,
sure you
let's help
subscribe
each
to
other
my
out.
channel and turn on the
Let's
bell
help each other
notification
out,
button for
right?
more
This
video
what
from
we can
me.
do.
And
Let's help
thank
each
you for
other,
watching. Make
right?
sure you
So
like and comment.
this it, right? This is the end. So thank you.